Welcome back to Fast Market. Alex Coffey alongside Kevin Hinks here. Let's talk some markets, Kev, real quick. S&P is down 7, NASDAQ down 83. Dow and the Russell also in red territory. So you have the NASDAQ the weakest, down about 0.5%. It's sort of had that, I guess, moniker, or it's carried that weight all week long, it's felt like, Kev. It's really been the weakest of the indices. But after several months of outperformance, the Russell trying to gain some relative performance is also sliding by a pretty wide margin here, 0.3%. But all of this seems dwarfed by the price action of recent sessions. And if you look at my chart here real quick, guys, the green and red lines of each one of these charts represents the highs and the lows of the previous day's session. So if you were looking at a longer term chart, this would just simply look like the candle is smaller and inside of the previous session's candle. But I like to look at this to kind of get an idea of just how the day is shaping up, Kev. So to me, Kev, this is classic inside price action, but you talked about those Fed speakers throughout the day. If anything's going to shake it up, it could be them.
Yeah, there's 6 of them talking today, including Jerome Powell. So there's already been a few comments from them this morning that have leaked into the headlines, but certainly their rhetoric coming out of the Fed meeting is going to be important. But so far, Alex, with the news overnight about crypto in China and the futures pre-market, this is turning out to be a flesh wound. Now, the day's not over yet, but they haven't done any serious damage to this market after 2 really strong days, Alex.
No, well said, Kev. And let's talk some price action here, because the stock we're going to talk about here, which is Deckers Outdoor, parent company of several brands that you will recognize, I promise you that, is on the move today. And a lot of this may be tied to some of the Nike action, but we'll find out more here. Let's welcome in our guests for our Hashtag segment. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder, Landon Swan. Jenny, I was trying to find something, and it looks as though this is just simply tied to some of the concerns out of the supply chain with Nike. Stock getting hammered today, though, down 9.45%, $386. Pretty big move.
Yeah, stock getting absolutely pummeled today and actually seeing a worse move than Nike, which is interesting. But I think a lot of this is just its correlation to Vietnam, because we saw Nike's CEO come out and say supply chain issues, but also the fact that a lot of their factories and their operations in Vietnam were completely shut down or at a very reduced capacity. And Vietnam is where Nike gets most of its shoes, which is 55% of its revenue. So it actually makes sense that then Deckers Outdoors would be taking such a hit, because their main business is shoes. So if they have really any exposure to Vietnam and shoes, that is obviously not good news for them, being that Nike is sort of the powerhouse. But Nike has, I believe, a bigger apparel leg to fall on than Deckers. So Deckers operates through 6 segments, but its 3 most notable and largest are its UGG brand, HOKA, and Teva. And now UGG and HOKA ONE remain its primary growth drivers. So this is, to me, a shoe company, which again, is that why I think the stock is moving down over 9.5% today. But the more positive news is for this fiscal 2022 year, management is actually forecasting its net sales to be up between 18 and 20% compared to last year. So they are seeing a healthy growth rate, and they'll report again at the end of October. But for now, this move is obviously concerning, and I think a little bit unexpected. And we're seeing a lot of these athletic retailers and also just shoe retailers getting absolutely crushed today with Nike's earnings. But I actually saw an interesting report that was from last week from a Tesla analyst who said that these sort of retailers were the star of this past earnings season. Something we talked about yesterday was that Nike sort of unofficially marks the end of an earnings season. So now it's I feel like it's an important takeaway to look back and say, what was the second quarter earnings season? And this analyst believes that in that case that it was really the retailers. And I thought that was interesting, because this is a space that if you had told me 2 years ago the retailers, these small, maybe mall retailers, would be winning the earnings season, I would have laughed. But it is interesting how that has changed. Consumers have more discretionary spend than ever. Products are also getting smarter. We're seeing shoes advance in ways that they haven't been for the last few years. And retailers are also finding a pretty good way to sort of drive foot traffic into their stores again. Now, I know that's offset by the fact that we're seeing some decline in the online sales, but Deckers has done a good job sort of transitioning to this DTC strategy, which we've seen in both a Foot Locker and a Deckers. And what's interesting, Landon, is actually I saw this comparison to Deckers to Crocs a lot on Twitter this morning, and I know that it's a company that you and Andy both love, and so I am curious, how their different brands sort of pan out, and also the comparison to Crocs, which was cracking me up.
Yeah, well, look, so I like Crocs. Andy is a fanatic lover, so I don't want to get mixed in with that. I mean, he'll wear them on business trips. I mean, he absolutely loves Crocs. But yeah, we do like to compare them just because of sort of the cult following I think that they have. And Uggs don't have that exactly, but they're kind of in the same conversation. And actually, just a little bit of a side note, UGG was actually, Decker Outdoors was one of actually the first call that LikeFolio ever made. Extremely bearish going into a winter season. I can't remember if it was 2016 or 2017. It's when we kind of figured out that social mentions were very much proof of whether or not people were buying shoes. But since then, the company has really changed quite a bit. It used to be all Uggs, and now it's this other brand. HOKA ONE ONE is how you pronounce it. It's a wild name, but people love it, and it's actually it's actually growing, and it just surpassed UGG boots as far as percentage of revenue at 42%, 42.1%. UGG is 42.0%, and they're growing faster. So that's actually a lot of the focus, and one of the reasons that LikeFolio actually went bullish to its members back in February in the 325 area. So we've been long on this one for a while. Today, obviously not a fan of the action today, but so we're up very well on it, and the reason is because of this other brand, HOKA. And when we look at it, overall, if you look at the company overall, generally speaking, the mentions are very heavily weighted toward UGG. And it is a very seasonal ramp up. I mean, you can see it if you look at the chart. The fall season is huge for this company to make winter boots, and so of course that's always going to be really big. And it's actually off to a little bit of a slow start this season. When we look at the the scatter plot here that shows all the different brands, one thing that's really interesting. So we've broken Decker Outdoors into its two main brands, and you can see where UGG sits right next to Crocs. And then there's HOKA way up in the top right. I mean, the purchase intent growth is extremely impressive, but that happiness level, you just don't see that. Over 90% for shoes is insane. People absolutely love this product, and that's a big reason why we are bullish on it long term. Again, it's over half of the revenue for I'm not over half the revenue. It's the largest brand when it comes to revenue for the company. And of course, today they're getting killed because of supply chain. They do have about over 50% of their supply comes from Vietnam. And so investors are very aware of that. They saw what happened to Nike. That's what's happening to Decker Outdoors today. But the good news for investors is now that's priced in, right? So that is known. You've got the drop today. That's all priced in. And the unknown is what's the demand, what has the demand been, and what's it going to be? And for us, we're seeing it's kind of so-so on UGG boots, but fantastic for HOKA. So we're bullish on Decker long term, and we're looking forward to the earnings report in late October.
So Landon, when you look at these two, and we'll just focus on the top two, UGG and HOKA, because those are the two I think that most people understand. UGG, without a doubt, the most accurately named product in shoe apparel history. And then there's HOKA. And that enters into my world because I'm a runner, and these shoes are supposed to be unbelievably comfortable and soft on feet. And that's why they seem to be getting. But here's my question to you. Where are they on the scale or size of other shoe companies like Nike, like Adidas, like Under Armour, like all the other shoes? Oh, Skechers. Yeah, that's the other one I was looking for. Where are they on the spectrum of those names in terms of size and revenue, Landon?
They're pretty small. I mean, if you look at them compared to those big names, they're pretty small, but they're growing very quickly. UGG boots is up. The ugly boots are up about 70% year over year. HOKA is actually up 95% year over year. That's earnings. That's not mentions. That's actual revenue. And so that's why they're passing, and that's why they're growing so quickly. And again, purchase intent is important and all that, but when you talk about a company that's got 90% happiness for shoes, you're going to get people buying more pairs, telling their friends. It's going to spread. We've seen this with other shoe manufacturers, smaller private ones. I tell you what, this is a very, very bullish sign. Not to mention, as we've got a chart here on digital mentions, they're doing a good job with direct to customer and digital. So they're actually plus 19% year over year. They did a lot of good work there. It's sticky, right? So this wasn't just, I can't go to the stores and I want some UGG boots, or I want some running shoes and I'll order online. This is actually showing that there is a growth here and people have stuck around. A small change of behavior, plus 18% is not huge, but it is a good number to be able to beat 2019. So you've got some stickiness there. I think that's really important. And this is the only thing that's kind of weird about this company. We talked about earnings reporting in October, late October. They have, I'm going to use air quotes here, they have beat their expectations the last 18 quarters, which to me kind of sounds like like a 12 handicap who shoots mid-70s every time. I mean, this is a bit of a sandbagging company here. So, of course, they're probably going to beat again. But I don't think that's really the concern. I think the key is not what analysts say the expectations are, but actually how many people are buying these shoes and do they love them? And for HOKA, it is just tremendous. I mean, 90% happiness is extremely high, and it's showing in the fact that it is passing the signature brand of UGG boots. And now Decker's recognizing this, and they're getting retail stores out there. They're sort of going, I don't want to say all in, but they're putting a lot of chips on the table when it comes to HOKA. And that's a really smart play because of the fact that the consumers absolutely love them.
Landon, I'm not sure if you caught our conversation in the previous segment, but to sum it up, essentially our previous guest, Nathan Peterson, basically just expressed a little bit of concern about cost push inflation there at the end. With the recent information from Nike clearly, but also FedEx and what that might mean going forward. I'm not super familiar with some of these newer brands, the HOKA that you mentioned, but I did a quick search. This is a price tag of $150. It's not a cheap, low-quality brand. I know, obviously, UGG is perceived as a little bit higher quality brand as well. So when you're thinking about inflation, clearly your data is strong. And this is sector-wide. I have all the different peers here. The pressures today are clearly sector-wide. It's not one or the other. Do you kind of look at these companies that are higher margin, maybe higher quality products as a little bit more easy to pass on to the consumer some of these costs, and therefore that's less of a concern, and this 9% down move actually could be an opportunity?
Absolutely. That's a great point. I mean, if you think about which consumers are most sensitive to a 5 or 10% price increase, it's going to be the ones that have a very low price point. So you talk about a running shoe up in the hundreds and the low hundreds, they're going to be able to figure that out. They've got the high margins. They can either pass it on to the consumer or reduce their margins a little bit. And I think either way, they've got a lot more flexibility than someone who's coming in at the low end of the market. So high margins is a great business to be in. And this is a company that, again, if you're talking about, I hate to hammer this point so much, but if you're talking about these shoes that have this high of a price point, and you've got 90% happiness, that is a great recipe for success. It gives them tremendous flexibility, but I'm not going to downplay the fact that over half their manufacturing comes from Vietnam. We saw what happened to Nike, so that's a huge concern. I will say, to the plus side, on the bullish side, the management has authorized and is actively buying back stock to the tune of $750 million, so that's happening right now. That will force upward pressure on the stock. Overall in the company, I did want to add, talk about this chart real quick. This is the mentions count for the total company. You'll notice that it is behind year over year. Huge run up each winter around those UGG boots. And again, the mentions are heavy on the UGG boot side, not on the HOKA side. It's not proportional when it comes to sales, but the data that we've got as far as growth and happiness on HOKA is extremely bullish. So we are sort of discounting this chart a little bit. We love that last winter, they had a big pop, and instead of falling off, it held for a little bit. I think that was very strong for UGG boots. Right now, we're a little bit late to the game as far as the fall season getting started, or it's a little bit behind. And if that was all you knew, you might be bearish on this stock. But you've got to know that there's a two-brand dichotomy going here, and HOKA is crushing it. And I think that's the reason that we're so bullish moving forward.
Landon Swan, thanks as always. Have a great weekend. The co-founder of LikeFolio.com. Jenny,